Hello, everybody. My name is Matt Thomas, and I am a local real estate agent. I've got Brian Dewald here, local top producing lender, and we welcome Brian to the show every week. It's really our show together, so you're always the guest, Brian.
Thanks.
So, anyway, we get together and we have this thing called Mortgage Minute, right? And then we do this weekly in order to not just combat headlines, but to make sense of what's going on. There's a really great quote called, "Headlines do more to terrify than clarify." And I've been paying attention to a lot of the headlines recently that as you dive further into the stories, no matter what the headline seems to say, you really find that the news just is not as extreme as what the headlines want to tell you it is. So it's just kind of buyer beware. When you're reading these things, we want you to be able to tune to a show like this and to say, okay, where can I get real information? What's really happening? Today's September 8th. What's happening in the next week or so? And so obviously, we would invite you, of course, to subscribe to the channel and pay attention and to get in these updates every week. We would also like to invite you, before we get started, we want to invite you into an opportunity to connect with Brian or myself. If you have any questions, we've got a link below actually that will help you be able to get yourself on our calendar or to reach out and email us to be able to do that. So that's our quick invitation. Brian, with that, let's jump into the news. Tell us what's kind of the news and what's going on this week.
Yeah, so pretty exciting news just rolled out yesterday, in fact, and there's a little bit of confusion as to when this will actually take place, but it'll happen very, very soon, within 48 hours or less. So normally this happens about December, maybe even into January. I've been doing the mortgage business a long time, and it's usually January 1st is when this rolls out. But a lot of folks have heard Fannie Mae, Freddie Mac. They're the big behemoths on Wall Street that make up a lot of the rules for the mortgage industry, particularly when it comes to conforming conventional loans. So, the conforming limit is what I'm referring to here, and it adjusts every year based on, a multitude of factors, primarily average home prices and stuff like that. So, and when that limit is there, anything beyond that limit is what we refer to as a jumbo loan. And the jumbo loans they're great loans, but they're a little tougher to qualify for. More of a down payment, not nearly as easy to get through from an underwriting perspective. Sometimes the rates are a little higher. Oftentimes the rates are higher. So what's cool now?
Credit requirements may be different.
Say again?
Are the credit requirements sometimes different as well?
Vastly easier for conventional financing than for jumbo. Yeah, great question. So anyway, that conforming limit jumped up to $647,200 this last year. And just as of the last 24 hours or so, Fannie and Freddie are bumping that to $715,000. So that will be a big jump, number one. And number two, what's interesting is that they're kind of rolling it back, making it available like right now, today, tomorrow kind of a thing.
Yeah, you said it normally comes out at the beginning of the year. I know I had some clients buying new and they had to wait for that at the beginning of last year to make sure they knew what that was going to be.
Right. Here
it is September and you're saying we already know what it is. And is it usable right now?
Yes.
Once it comes out?
Yep. I've even got a loan in my pipeline that we are going to retro a little bit. And it's crazy how openly free they are with rolling this out at the moment. So it's kind of shocking news, breaking news for sure when it comes to nerdy mortgage stuff. But anyway, that puts, just to put it in perspective here, a buyer at $752,000 with 5% down can now buy a house, $752,000. So really a high limit, which is great.
Yeah. And ultimately, Brian, I mean, we hear that, our lending standards are so much different than they were back when we had, like the Great Recession, for instance, the housing crisis. And now we have such stringent rules, it seems like. Do you think this is loosening that, or do you think this isn't? It's just more of a bonus that a buyer gets to take advantage of?
Yeah, that's a really good question. I don't necessarily. I think it's neither here nor there. I don't think it's only here to help with the increase in house prices. Really, it doesn't. It doesn't change anything from an approval or an underwriting perspective when it comes to guidelines or anything like that. It just allows us to sort of chase, as values go up. It allows us to kind of chase that a little bit so that we're not, having to do jumbo loans for median homes. You know what I mean?
Right.
Yeah.
Yeah, absolutely. Well, and I know that can be a real, depending on how much down payment you've got, having that, if you're right at the threshold of where you make the change from conventional to the jumbo loan, it really can throw people off. And sometimes, the house that is just barely out of reach just doesn't make sense for them. And now this gives some more room if that's the case. So
super cool news.
Cool. Very good. Brian, let's also talk about kind of where mortgage rates are at. And, if you want to, you can say where you think they might head. But obviously, we've got the Fed, of course, threatening to raise the interest rate again. And as we've discussed many weeks in a row, there is no direct correlation with the Fed rate and the mortgage interest rates. Mortgage interest rates are affected by so many things, but including the bond market, right? But not necessarily the Fed directly. Now, why don't you tell us about that can sometimes get baked into it, and there is an indirect effect in some cases, right?
100%. You're absolutely right. So this last Friday, the Fed had a meeting, or whatever they call it, where they released the notes from the meeting, and they are kind of spilling the beans about what their anticipation is going to be during their next actual release of mortgage, not mortgage rates, but their federal funds rate. So, the last two meetings has been a 75 basis point or 0.75% increase to the federal funds rate, which the first one is a little bit of a surprise. I think most people were under the impression that, the 0.5% uptick was going to be happening, and we were a little bit shocked to see 0.75. That actually helped rally the bond market, which was good. So we saw a little bit of a dip coming out of July's Fed meeting in terms of mortgage rates. So primarily just because we thought it was going to be 50 basis points and ended up being 75. So the subsequent meeting was indeed 75, and then they came out last Friday and said they're going to do another 75. So the news last Friday kind of shook up mortgage rate markets a little bit, and the news there. Obviously, there's not a direct impact because the Fed hasn't even moved the rate yet. But there was enough downward news or upside down news, if you will, that caused some of the mortgage markets to not react well. So,
well, and they react ultimately with the news that they hear, not necessarily. So oftentimes, by the time the Fed's making their changes, we've already seen the effect of where how the mortgage rate is going to react. Essentially,
correct.
Is that right?
Yeah. So I did just a quick glimpse to see, kind of what the trend has been over the last few weeks, and the average locked fixed rate is up about 0.8% over the last 3 weeks. So we've been slowly sort of, inching upward over the last 3 or 4 weeks.
Well, and it goes into, it speaks again to something else we brought up several times, is that rate buy down. If you can get, you said that's an effective way right now to use some closing costs. Again, in this market, not before, not in February. In February's market, you couldn't ask the seller for closing costs for anything. Now you can, and you can use that to your advantage, and you can buy down your rate so that you can make it a lot more palatable, and it will save you just gobs of money over a 30-year mortgage for sure. I read something that I wanted to share real quick. It says you could chase better numbers for years on end in some cases if things don't go your way, and that was from Kevin Mahoney, the founder and CEO of Illuminant. Anyway, that was a CNBC thing, and so everyone's sitting here trying to predict what the rates will do and where they're headed and when the right time is to buy. There's other factors, of course, that come into play when you're considering buying a home. It doesn't only have to do with the rates. Now, obviously, the rates are going to affect affordability and how much your monthly payment's going to be. So it's a big factor. Don't get me wrong, but when I looked at, for instance, prediction by Freddie Mac and Fannie Mae, they both think that the rates potentially will be back in the fours, in 2023. That's just a prediction. You have to take those sometimes with a grain of salt, and that's why I brought that quote up. Ultimately, chasing those rates, you just never know, right? So if you're looking for a home right now, or you're considering, looking for a home right now, just reach out. Let's do some consulting. Let's see if it's the right time. If there's other factors in your life that point to it makes sense right now and it's an affordable thing for you to do, then, that's ultimately your decision to make as homeowners or potential home buyers. But ultimately, that's what Brian and I are here for, is to to offer our services, our expertise, and a consultation. So again, please look for the link below to schedule a consultation with one of the two of us, and we can, kind of see where you stand. Your situation is unique. We understand that, and so that's our best advice, I think, right, Brian? Just take it day by day and find out what makes sense. There's all kinds of programs that you have and all kinds of ways that you can, help people determine if a house is in their future or not. So
correct.
Very cool. Well, Brian, did you have anything else to share?
I think one thing I was just going to mention when we talk about, the potential to buy down and getting help from the seller, there's a multitude of ways that we can look at that, whether it's a 2-1 buy down and a permanent buy down. There's lots of different ways, and it doesn't always fit inside every category, if that makes sense. It's not a one size fits all type thing. So very important to. Yeah.
And that's ultimately what I want to impress upon everybody's mind is just, there are multiple ways to skin a cat. There are multiple ways. I mean, with your experience, with the tools that you have, there are all kinds of different ways to figure out, what makes sense for potential home buyers again. So, even if you listen to what we say here, like you said, it's not a one size fits all. So it's not the one thing that we threw out there that might be a great idea for some people. Let us work through it with you and see if there are options for you. You ultimately make the decision again as the potential home buyer. And, we just are the consultants. So that's what we love to do. And we're happy to do that for you. So again, please stay, with us, subscribe and tune in every week. Make sure you're getting up-to-date information as things change. And, anything else that you want to share, or should we?
I think that's it. We'll wrap it up.
Call it a week. Very good, Brian. Well, I appreciate you being here.
Thanks again.
All right, we'll talk to you everybody soon. Reach out to us. We'd certainly appreciate that.